welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock markets, how the markets closed in trade today, and where were the gains and losses seen, and what should you be prepared for in the next week coming as well. So let's start off with the closing action first. Of course, it was a down day of trade right from the word go. We were trading downwards, and towards the end, we actually saw the losses getting extended for both the benchmark Sensex and the Nifty. The Sensex losing over 700 points, diving very, very sharply in today's trading session. The Nifty also breaching its 17,200 mark as well towards the closing of the session. Now, what has really caused this kind of a stir in the market? Of course, there were weak global cues that we opened with, and there was a selling pressure coming in from all across the sectors. Of course, the trigger was the US Federal Reserve that hinted at an aggressive rate hike, half a percentage point amid concerns of higher inflation. Fed Reserve Chairperson Jerome Powell said that half-point interest rate will be on the table when the Fed meets in May. Remember, last month the Fed had already raised the rates from near zero to a quarter percentage point. And back home, Sensex slipped about 715 points in trade today to end the day at 57,197. The Nifty also moved over 220 points lower in trade, or 1.2% down at the end of the session to close the day at 17,172. The broader markets also ended on a negative note, almost a percent a downtick for the mid caps and 0.3% of a fall for the small cap index in today's trading session as well. Now, when we talk about some of the other experts who actually looked at how today's trading session panned out, they had to say that of course, it was an uneventful week. We did see a lot of volatility, 2 days gains, and rest of the days on a negative note as well. But apart from that, you actually saw Milind Muchalja. He actually believes that the Indian equity markets have been gyrating over the past few days after a healthy pullback that was witnessed since the geopolitical tension started in March. Now, while the headline indices seem to be consolidating, the larger activity seems to be have shifted to the broader markets. Now, he believes that with a larger number of small caps, mid caps seeing greater market participation, especially in sectors such as sugar, fertilizers, textiles, paper, etc. Also, the markets seem to be a slightly more cautious now after the Q4 earnings have begun. We have seen a mixed note kind of earnings being reported right now, with some disappointments also coming in from the industry heavyweights as well. He also believes that investors must prefer to actually wait out for more results to be announced to then take a call on whether they want to take positions right amidst the earnings season as well. On the other hand, Sumit Magadia, who is the executive director at Choice Broking, he had to say that overall the Nifty indexes has some support at 16,800 mark, while the resistance is placed at 17,550 as well. Also, the Bank Nifty support is right now placed at 35,500, followed by 35,200 at this point in time. But definitely, investors should buy high quality stocks in this steep market corrections and wait with patience in this time of high uncertainty, as per most of the analysts who spoke to us on Business Today as well. Now, overall speaking, the markets also, you also had to note that apart from the earnings and stock specific action that we've been seeing, there's been macro concern around the geopolitical tensions continuing to rage on, crude oil prices remaining elevated, the inflation numbers also staying high as well. So those are the factors that will still continue to rule the sentiments as we move into the next week. But what will really move the markets on Monday? Well, markets will first react to ICICI Bank numbers. In early trade on Monday, besides global cues like updates on the Russia-Ukraine crisis, China's COVID situation will also remain on the participants' radar. The slide in the Nifty index has definitely faded hopes for a directional move that we were hoping from the last two sessions, and we may see some more consolidation going forward from here. With that, I wrap up right here on this edition, but a whole lot more is coming up for you up next on the Business Today YouTube platform. So don't go anywhere and stay tuned.